Hi, today is Monday the 25th, and this is this week's outlook for the coming week. Last week I was a little bit hesitant because we had quite a bullish run the week before, and on the 18th, when the week started, on the 18th, we saw that yes, this resistance was tested for support and the world market went up again, and now it's looking like it's going to be the same. Basically, the resistance is now on 45, 30, 35, and the market is going up. Tested it yesterday when futures market reopened. We also had a test on Friday when market dipped and bounced. I have plotted a tentative channel that looks a little bit more slanted than the previous one, but we are still in this kind of a upward market. It's shallow enough to be sustainable. Basically, this was not sustainable, but the profit taking was down to only the bearish resilience level, and this time the market is up. I could actually have plotted a fib from here, but from the previous lows the bearish resilience is on 45, 45.05. If I now, just to be safe, plot another one from here, where we'll see that the bearish resilience here is more or less on the resistance now turned support. This screen is cluttered enough, so I'm going to remove this one. It looks like it's quite positive, quite bullish ahead of very important earnings, and regardless whether this is rational or not, we have to go with the flow. That was my only message last week. If we look now at the Nasdaq is also going up, but it's not at all-time highs, and we could have more hesitation on the tech front, and that's quite normal because we have those big earnings coming this week. Facebook today, the whole week will be, if not chaotic, at least somehow agitated because of this. We see that the high level volumes here on Nasdaq are here near the current highs. But now if we go back to SPX, same here, the tug of war is occurring around here. The next high volume level was on the previous resistance, so it's really like bumping on resistance, trying to push higher, and it could push further regardless of a darker economic background, which I explained. And again, if you're not on the Rhino Slack, please join it. I provide a more detailed update twice a day. So on the Treasury front, which is also a good indication of where the more cautious, the more conservative market is going, we see that the TNX, which is a 10-year yield, has gone higher, maybe bumping on the May-June highs, but it could still go higher. Of course, most of us are options traders on indices, but there are two things. Either you just follow the fangs, because the tech behemoths are actually determining direction for all indices. So that's probably the first level of interpretation when you want to read the market. And here we have probably something like an upward channel, but the fangs took a bit of profit on Friday. They probably will bump on this support level and go up again, or they could test the channel lows. The stronger support is here around 53.15. But if we go back to another background underlying force, and I was mentioning TNX, I would suggest you take a look at the treasury.gov website, where we can have a look at the 2-year, 10-year, and we see that the spread here is going higher, and the 5-year, 30-year also getting a little bit weaker. I'm not going into further depth when it comes to the bond market, but I mean the force is here. The bonds are selling off, the yields are higher than a few weeks ago, and the yield curve is also changing towards a more cautious recessionary indication. With if the yield curve goes into what we know on VIX, the kind of a backwardation, it would be probably terrible. We're not there yet, but caution is there. Now, since I'm on the website, we can look at the VIX, the VIX term structure. We still have a very good looking contango. It's flattening there, but that's beyond our usual outlook. So for this coming month, November will expire in 22 days. I mean, at this point, I would say that 19 is pretty high compared to the spot at under 16. So we will watch what's going on. But it looks like VIX has deflated a little bit too much. So on this front, we know that either the VIX future will go down or the VIX will go up. Generally, on indices and other underlyings, it is the futures market driving the spot market, but not so much on the VIX, so it can go both ways. Okay, so now let's go back to our outlook. I started with the 1 hour chart. This is not what I usually start with, but let's have a look at a longer time frame. 4 hour here as well, pretty bullish, although we see that the resistance is still the same. It hasn't gone up. Either we see this moving upward soon, probably in the 4600s or so, probably something like 4670s, 4680. We'll see how it goes. And yes, the bullishness is still there. Again, no matter whether it's rational or not, we have to go with the flow. There's not much of a retracement in sight. And if we look now at a daily chart, there again, daily chart, quite bullish, above all-time highs. It would be normal to take profit around here, but here again we have probably, I would say, 4500 as probably enough, or maybe 4575 if the market decides to go into a breather. But really, if the text would have to disappoint a lot to actually break the bull momentum, basically derail the bull train. The volumes have not been very strong, except on Nasdaq. Probably more profit taking on Nasdaq, but on SPX and the Dow, volumes have not been very, very strong. We're looking at 3 billion shares on SPX, all lower, which is indicative as well that this is probably a retail-driven bull market, and I think the institutions are more cautious on this. So today we'll be watching also where the VIX is going. There should be normally at least some concern, at least until Facebook earnings come. There have been also other news on Facebook announcing its metaverse and other things. So that may actually also be the whole package that's going to be. Probably also the anticipation of future earnings that will be of interest. We know the earnings are probably going to be good for Netflix and other earnings so far. The market has not really congratulated good earnings, but it's also sustained. At least, if only a pause, it has sustained the bull market. It has not been any strong retracement. So we may see the market digesting earnings this week without the market going down. Unless, of course, they disappoint by a large margin. Okay, that is it for now. Next video will be on the current trades. Thank you for watching, and bye for now.